Hey, everybody, this is Brian McCarthy, and welcome to this week's Market Monitor. Today is Friday, May 6th. I'm going to keep this to about 5 minutes because I just want to dive into some stats that are showing exactly what I've been talking about. The market is finally decelerating and has been for the past maybe 2 or 3 months. And it's just been, we've collected enough data now that I can really show you exactly how and why. So the important things to know here today are that, yes, the central bank just earlier this week decided to raise interest rates a half a point. But it's important to know that that does not directly affect or tie into mortgage rates. In fact, a lot of the steep increase we've seen so far this year in 2020 on mortgage rates has been in anticipation of exactly what's happening now. So the rest of the year, while rates still will probably climb, it won't be nearly at the rate that it has been over the past 5 months here since the beginning of 2022. And it is also very important to keep in mind that even though we are in the fives right now, that is still very low historically. And the reason since the beginning of the pandemic that they've been so low and the word for it is artificially low. And if you remember, rates were very low about 6 years ago, and then they started coming back up when the Fed was raising rates. It was going into the fours, and it kept going higher. And then COVID hit, and the market just the economy all but shut down, and we needed a stimulus. And so rates, mortgage rates, borrowing rates across the board were held and lowered and held artificially low to help us stimulate the economy. I'm having a hard time talking today. And that's exactly what it's done. And now it's probably worked too well. We're seeing some inflation, which isn't necessarily a good thing. So the central bank is increasing the rate to quell that, to calm that down a bit. But it's important to know that it's not going to be quite as crazy. So if you have been looking or you're feeling like now is the time, but maybe rates are going to make it real unaffordable for you soon, I would encourage you to get out there and start looking, because they're not going to get any better, but they're not going to get crazy high either. And I don't want you to get hit with basically a triple whammy here if you decide to wait. Rising rents, which are going up across the board, especially if you're in and around anywhere, Manhattan, Hoboken, Hudson County, they've been crazy over the past couple of months. Mortgage rates are going to continue to rise. So borrowing money is going to be more expensive and is going to continue to be so. And home prices really aren't going to come down. They're going to stop going up quite as crazy as they have been because of the inflation and the appreciation, but houses are still going to appreciate. So if you wait a year, you're going to miss out on the appreciation that you could have had over these past 12 months, and you're going to be borrowing money at a higher rate. Anyway, let me get back into this and show you some stats that show you why the deceleration is happening. So if you're still in the market or you're thinking about moving, now really is the time to do it. Let me share my screen here with you guys. I'm just going to share my desktop, put on my spectacles here. All right, so let's look real quick at Hudson County. And what I'm going to do here is compare, I wish we had April. We don't quite have April yet, but we're looking back, March, January, February, and March. And what I really want to be looking at here, if you can see my cursor, is comparing two things: new listings and closed sales. And I really wish we had pending sales on here, but we don't. So that's like new contracts that are taken. But what I want to point out here is that starting in January, at the beginning of the year, new sales have been increasing. So look at this number here for single family and townhouse. So 105, 575, they go up a little bit in February, and then a lot in March as we're hitting spring market. But compared to that ratio of closed sales here, the gap gets bigger and bigger. So right here, we're at basically 85%, 87% of this number. We go up here, holding steady right there. And then as soon as we hit March, it drops to 50%. So that's an important metric. New listings are coming out at a higher rate than closings are happening. So that means more things are on the market. There's more to choose from. people are either jumping on things or being priced out of the market. So if you are still in the market, be patient, look for that thing, like get aggressive and find the place that you're looking for, and make that offer, lock in your rate before things are too late. So let's look at Bergen County. We're basically seeing the exact same thing. So we started off beginning of the year in January where closed sales were higher than new listings that were coming out. I mean, if you've been looking around Bergen County or just, following this at all, it's not surprising where things had, anything that was coming on the market either was sold pre-market with like 10 offers or came onto the market, had like one open house with 200 visitors and like 20 offers. And then we go to February, that number drops. So new listings outpaces closed sales. And then in March, it's at like a half. So we started off in January, closed sales were above. Then in February, they dropped below to like maybe 80%, 70%. And then in March, it was down to almost a half. So that delta just got bigger and bigger. So this is the deceleration that we've kind of been waiting for here and that we've been talking about for a bit. I just want to show this here hyper locally as well. Just over, so we do have Hoboken stats here because Compass is a little ahead of the ball. Thank you, Compass. Than New Jersey Realtors here, or New Jersey Association of Realtors, but Compass puts this together for us. And if you want access, let me know. There's a link in the bottom of the email. If you don't get the email, let me know. But anyway, here, this is what we're looking at here. People are jumping into the market like crazy as prices are rising. Prices are rising and interest rates are rising because people want to lock it in. So asking price is going over here this past month. And so this is just overall, not a whole lot of houses, but condo co-ops is our bread and butter here. But so what we do have here that we don't have in the other stat is number of contracts. So that's things that have obviously accepted an offer but haven't quite closed. So that's a little bit more of a more timely number to look at than closed sales, because closed sales are a lagging indicator. It's about 2 months behind. But we can look at things that are coming on the market. So number of new listings right here compared to number of contracts. So that's literally like apples to apples here, new listings coming on and new listings that are getting taken off because they're accepting offers. So let's go back here in March, number of new contracts and number of new listings here. The delta was about 50 or about 30%. And then here, number of new listings increased from, well, I won't say increased, stayed the same, 170 to 168, but the number of new contracts went down almost 20% from 124 to 105. So that delta got bigger just in 1 month. Just for a hyperlocal market here in Hoboken. If you want to compare any of these across the board, you have access to all of these stats that are in the email. I'll just show you here real quick. So these monthly reports, you go into these folders, we can do any month here that's coming out. So April, January, February, March, April, yeah. So are the most recent. You have a link there. If you want to compare these, go right ahead. If you have any questions, please let me know. I am here to help each and every one of you. So I'm going to try, like I said, try to keep these a little bit shorter and just focus on one thing here kind of moving forward. But if anyone needs to reach me, my number is 617-851-9141. My email is brian.mccarthy@compass.com. I hope everyone has a great weekend and looking forward to working with each of you guys soon. Talk to you soon, everybody. Bye.